So good afternoon and welcome everyone. My name is Stephanie Zhuan, Vice President of Family Office Hong Kong at InvestHK. We are glad to invite 4 distinguished speakers to discuss the topic ESG, impact investing, and philanthropy. So with me from left to right, we have Ms. Chloe Sun, Chair of Simon Sun Foundation and founder of Sun Museum. Welcome. Mr. Tony Wang, founder at Alaya Consulting. Ms. Katie Young, Managing Partner at Sustainable Finance Institute. Welcome. And Mr. Peter Steen, CEO and Managing Director at Private Wealth Management Association. Thank you all of you for joining this discussion and sharing your insights with our audience today. To let our audience know more about you and better understand our discussion later on, may I invite each of you to briefly introduce yourself and your organization. The floor is yours. Maybe start from Chloe.
Sure. Hi, thank you. So I am the founder of Sun Museum. It's one of the few privately funded, non-governmental, non-profit museums, art museums in Hong Kong. So we founded the museum 7 years ago. We're into our 8th year. And I also run our family foundation, which supports this museum as well as other initiatives regarding the promotion of Chinese arts and culture. On top of that, I sit on various government committees related to arts and culture and museums. So I do also work a little bit in the family business. I sit on our board, so that's kind of oh, and I also run our family office, so that's kind of why I'm here today. A little bit of everything to share. Thank you.
Good afternoon, ladies and gentlemen. My name is Tony Wong. I started my company called Alaya Consulting, just doing one thing, ESG, 8 years ago. We completed over 400 ESG disclosure projects for private companies and listed companies. And we started a Hong Kong ESG Reporting Awards 5 years ago with the sole purpose of promoting industry best practices in ESG disclosure. Thank you very much.
Hi everyone, my name is Katie and I represent Sustainable Finance Initiative. We are a platform that is for family offices that come to us on impact investing. The genesis of this organization is very much from one family office based in Hong Kong that started doing this almost more than 10 years ago. And today we have a great community of family offices that are deploying capital in this aspect.
Hi, my name is Peter Stein. I'm the CEO and Managing Director of the Private Wealth Management Association. We are an industry association that represents all of the private wealth management firms operating in Hong Kong. And our mission really is to promote Hong Kong as a private wealth management hub. And as part of that mission, we have also been very engaged in promoting Hong Kong as a family office hub as well.
Great, thank you so much, and warm welcomes to you all. So as we all know that ESG has been the past decade and will continue to be an evaluationary journey. So for example, the Hong Kong Stock Exchange will update the focus areas and examples from time to time to reflect the latest ESG regulations and also developments. So the Green and Sustainable Finance Cross-Agency Steering Group, where mandate climate-related disclosures aligns with the task focus on climate-related financial disclosures framework by 2025. So this also brings us to the concept impact investing. The long financial return of investments like social justice, environmental prevention, and risk imposed on the future generations have gained more and more attention among investors recently. So if we extend this concept to an idea of altruism that consists of private initiatives for the public good, focusing on quality of life, philanthropy comes in place. In that regard, Hong Kong is relevant as it is generally recognized as one of the best Asian cities to become a regional hub for philanthropy. So today, our 4 distinguished speakers will take questions and comments from the audience on the topic. And anytime if you have any questions in your mind, please raise your hand and our colleague will pass you the mic. Online audience, please provide your questions in the comment box to the right of your window, and I will then pass to the respective speakers. So to start, I would like to ask Katie the first question that many of our audience could be interested. What interesting, exciting trends have you seen on sustainable and impact investing among families globally and in Asia?
Maybe a few points. Number one is we're having more interesting conversations, very much like the profile of Chloe, like family office, next generation that actually sit across the different functionalities when it comes to the business, philanthropy, and the family office. So 10 years ago, it's pretty siloed. So you might be talking to someone that's only doing the philanthropy part or someone that's only looking after the business. Impact investing becomes a conversation with someone that's wearing several hats. And from an investment point of view, that implies there's a spectrum of capital and there's a fluidity and flexibility in terms of how the family office can activate that impact. Is it in the philanthropic bucket, like the pocket idea that Chloe was saying? Is it in the investment bucket? Or is it through the greening of their businesses and so on? So this type of interaction has become more entrenched. It's not siloed, and it's has a lot of legs. So I think this is not just a hype, and it has a lot of potential for years to come. The second part is around market sizing. Recently, a report came out that impact investing, which is to us a subsegment of ESG. ESG is more risk mitigation. Impact investing is more intentional. It's about measuring the return and the impact of your investment, has grown to around 1.6 trillion in AUM. Now, that's not huge, but it's also not small. And so for us, this signals mainstreaming. And within that 1.6, actually, family offices do play a very critical role. So to us, I think it's about the size of the opportunity. We've alone at SFI looked at over 200 of these different opportunities in the past 16 months. So for family offices that want to start this journey, it's a great time because your opportunity set from 10 years ago has really grown quite significantly.
Thank you for the trend sharing. So to Chloe, having observed this phenomenon, what do you think is the significance of ESG and impact investing and philanthropy to the ultra high net worth family offices, because you are also managing the single family office?
I think ultimately it's about the passion and vision of the family or the founder, or whatever you call that. So in our case, my father founded a business 40 years ago, and as the business grew and as he was able to obtain more resources, he wanted to give back to the society. I think that's a story that echoes throughout Hong Kong or internationally. I think actually, especially for Hong Kong, we have a very long history and a very strong culture of giving. I think, people always consider Hong Kong as a very, materialistic place, but actually the culture of giving here is extremely strong. And even in terms of the giving to arts and cultural organizations, which when we started thought was a very small or niche area, it turned out that a lot of studies have shown that we are on par with places like UK and the US. So we actually do want to, entrepreneurs or people who have access to resources want to give back. I think the challenge is how to do it systematically and how do you measure impact. The challenge for us was that, my parents, they had the passion for the promotion of arts and culture in Hong Kong. So about 20 years ago, they started making donations here and there. But at one point, you want to understand what you're doing as a whole. And in order to do that, we felt that we need to set up a foundation to properly track, to measure, and to also, put a name on it, right? So to build something, just like building a company, to build something that would allow us to have a very clear mission, which is to promote, advance, and preserve Chinese arts and culture, and to always ask ourselves, are we spending money in the right places? because it's very tempting. So I love animals, and I also am passionate about the work we do as foundations. And personally, I always want to say, oh, maybe can I allocate some money to the animal area? It's not that we don't care about it, but it's not the mission of the foundation. So I think that's the beauty of having structure. You can continue to meet other goals in your lives or in your family's lives, but having a foundation or having an entity that has very clear mission, very clear budget, not only helps family members to work toward the same goal, it also helps you to answer to the public. So our foundation focuses on this. Unfortunately, we don't have the resources to help with this area. I think it's beneficial in that way. Going back to your question, I think ultimately, having the sort of what I work with right now is the corporate side of the family business, the family office, which provides services and supports to any activities not related to our business. And then having the foundation, I think it's kind of like the holy grail of structure, right? Because as Katie was saying, I always consider, it's the same pool of resources ultimately from the family perspective, but it really helps you ask yourself, what are you trying to do with these resources? Am I putting it in family office where I want to invest and make sure that the family has resources in the long run through investment and through various other activities? Or do we want to put these resources into giving back to the society? Or do we want to give these resources, put it back into the business so that it can grow? So it really helps you visualize it, I think. And I have to say that all these three entities for us are not very big. We're not talking about huge setup, right? So I think my experience right now is that you can do it at a really large scale, or you can do it at a very, very small scale as well. We're kind of a small setup because I'm involved in all three. But I think hopefully in the long run, if everything becomes more mature and more established, then we might have different professionals being more dedicated to each area, and then we all come together to meet our long-term goals.
Thank you for sharing from a single family perspective. Now my next question is to Peter from industry expert perspective. How do the private wealth management industry overall deal with incorporates ESG, impact investing and philanthropy into the organization, the practice to cater the needs of the ultra high net worth individuals and family offices?
So I guess the first thing I'd say is clearly ESG, philanthropy, impact investing have all become a more and more important component of the private wealth management offering for clients across the spectrum. Whether it's risk mitigation through filtering your portfolio with ESG criteria, all the way up to impact investing and traditional philanthropy. All the major players in this sector have some kind of an offering or multiple offerings because they're responding to the demand from their clients. It's still relatively nascent in this part of the world versus elsewhere, particularly on the ESG side, but definitely the trend is pretty clear. Everybody's expecting this to become more and more important to what the private banks are doing. On the ESG front in particular, we have some data from the latest PWMA annual survey that we've done. We're going to be releasing the results next week. That our firms, currently, they have, say, 86% that say less than 10% of their AUM is invested in ESG at the moment. But they are expecting 76% of them are expecting more than 10% of their AUM to be invested in ESG in 5 years' time. So that's a pretty radical shift to see happen over a 5-year span. So that gives you an idea of the expectations. On the client side, definitely the interest is there. I think on ESG, and we can talk about this a little bit more later, the shift is maybe subject to a few more ups and downs because while there has been an increase in recent years generally, this year the client interest level has sort of dipped a little bit in ESG, partly due to the volatility in the markets, what's happened with Ukraine and Russia and inflation and the sense that for many clients, ESG may seem like a nice to have, but not a necessary consideration to apply to your portfolio. I think that's going to change because people will start to realize that actually ESG is about risk mitigation, and the risk is going to grow higher and higher over time. So that attitude will change. But at the moment, I think a lot of clients don't quite view it that way yet.
So you are saying that the fundamental system in the industry is actually changing, not only impacted by the overall trend, but also pushed by the regulations as well.
Absolutely.
So as ESG has been emphasized by many institutions and investors in Hong Kong recent years, so could you, maybe this one is to Tony, could you share with us some of the best practice that you observed?
Thank you, Daphne. First of all, ESG has been changing for the past 8-10 years, and it's still changing. And same, I think, is for impact investing. There are more disclosure requirements, frameworks coming out every 1 or 2 years, and we're going to face another new reporting requirements probably in 1 or 2 years. So the industry best practices also have been changing. I think, first of all, if we talk about impact investing, we are advising our clients to not just doing the compliance work, but really, think about what sort of impact they are creating to the environment, society, and the economy. So it is critical to explain to their stakeholders. Otherwise, it's just disclosure for the sake of disclosure. So first of all, it's about the strategy. Whether the company, whether it's a private company or public company, they have a sustainability strategy. What sort of direction they are contributing to? What SDG targets that they are focusing on. It is critical to have this strategy and direction. Otherwise, if you are doing environmental a little bit and then social a little bit without a key framework, then it's difficult to explain to the investors that what are you trying to achieve and the impact that you're trying to create. Second is the governance. It's been pushing very hard by the Hong Kong Stock Exchange for the past 2 years. And also, I think for impact investing as well, you have to have a well-established governance structure. It is only, from my previous experience, only a company can only succeed in ESG if they have a board level kind of governance structure with the chairman or the second generation, third generation sitting in the board and looking after ESG. Then they have better chance of convincing the general public or the stakeholders that they are actually trying to do good. I think the third thing is about data. it's been a a challenge for issuers, for listed companies, and institutional investor has been talking about data integrity for a long time, and like I said earlier, it's still developing, and the industry is still changing. So having in Hong Kong, on average, we have a pretty good ESG disclosure level. But how are we going to take it one step further to have these data more readily available and in a cost-effective manner, especially if we are talking about, we're dealing with carbon neutrality. And we have, upcoming reporting framework asking companies to disclose Scope 3 carbon emissions, which means the upstream and downstream emissions. The availability of raw data is important, and the best practices that we've seen for the past 8 years or 10 years is, companies are more putting in more resources into these ESG raw data, and in presenting a consistent, reliable information to the stakeholders.
Thank you. So next, I would like to actually explore more on the investment angle, because talking about family office, managing their wealth is a key task. So we already deep dive into the overall trend and how the family offices and wealth individuals incorporate ESG into their overall practice. So in terms of investment, how do you think currently the ultra-high net worth family offices manage their investment, and how to make sure the investment will achieve the planned goals? Maybe Katie and Chloe can address this one.
Maybe I'll address it in two ways. One is more from the resources perspective. As you know, ESG and impact investing is an evolving space, and actually everyone, including myself, is constantly just catching up to speed. So nobody is complete expert, as you can tell by the amount of courses that are out there. So I think for any family office to want to start the journey and make sure that the whole strategy is intact is finding the right team and resource. So it boils down to what we've seen in family offices, making new key hires, because typically maybe no one within the family office or the investment team is an expert. So figuring out, do you need a climate expert, or do you need someone generally understanding ESG with a passion around impact that can really quickly learn and get up to speed? So making sure the infrastructure is there is one. There's a lot of talk about measurement. In reality, I don't think there's a lot being proactively done when it comes to the family office context. We're still at the stage where more focus is around investing and deployment of the capital. So you've got to invest more before you really need to measure everything. Having said that, there are some really pioneering, forward-thinking families that are, tracking the carbon emissions of their portfolio, ranging from public equities all the way down to their sort of venture investing, and trying to see what else they can do to deepen that impact. And so I think making sure you have the right team and the infrastructure is really the first step, which is critical. And then, of course, it's surrounding yourself with the right network of people, other families that are doing it, so you can kind of share best practice and learn together. What we've seen in our community is very much sharing the know-how across different industries. In real estate, what do you do? Shipping, financial services. So there's a lot of cross-pollination that would help families quickly get up to speed.
So talking about sustainable finance, it has gained more popularity in recent years. Your organization is also working on this front. So what are the major themes in the area, and how investors could seize opportunities?
So as I mentioned, there's a lot of opportunities. So we really needed to find a way to narrow it down, we did a pretty bottom-up approach and did a survey with our family office members. And so currently we focus on around 8 thematics. 4 to 5 of them are all environmental related, whether it comes to circularity, plastics recycling, energy, sort of renewable energy all the way to green hydrogen, and also the food and agricultural theme, not just alternative protein, but all the way up the supply chain to agri-tech. On the social side, when we think about ESG, social side, there's coming from the philanthropic minded families. They've already been charitable on themes like education, on healthcare, or even affordable housing. So that spills over for us to look at what are the investable areas within these areas as well. Mental health is also one that has been emerging, probably due to COVID. I think everyone has been thinking about that. So some families, apart from the philanthropy side, are thinking about what are some of the tech solutions that can be applicable.
Sure. Chloe, do you have anything to add? Otherwise, we can talk about more on the ESG products. Okay. So how is interest in ESG products changing among private wealth management clients in Hong Kong? I think this one to Peter and Katie as well. How does the level of interest among these clients in Hong Kong differ from what we see elsewhere, especially in EU, Europe?
Yeah, so as I alluded to before, I mean, the interest among clients is definitely rising. So, you know, what we've found from the data that we got from our latest survey this year and last year is that in both cases, clients who were surveyed showed a strong interest in having more of their portfolio invested in ESG products. You know, a higher percentage of the AUM that they had with the bank than was the case for the firms themselves overall with their AUM. So in other words, you know, let's say, you know, the firm had only 86% of the firms had 10% or less of their AUM invested in AUM, but the clients actually wanted much more of that. So it tells you that, you know, there is a gap between what the banks are actually providing and what the clients want. But it's not necessarily because the banks are just not providing the services. It's because there's a gap in the market, you know, with what's available. There's a gap, an information gap in, you know, the quality of data that allows people to make those investments. And so, you know, the interest is there, but we're not seeing it kind of realized in terms of actual AUM in Asia yet. So in Europe, on the other hand, there's definitely a higher awareness and interest or actual degree of investment in ESG for several reasons. One is that regulations around ESG have been in place for a bit longer. And therefore, for investors in Europe, it's a little bit easier to see the risk of not being invested in companies which are compliant with ESG regulations. Right? You can actually see there's a downside. So it's, you know, again, it's not just an optional thing like, oh, I'll do this to feel a little bit better about my portfolio. It's, you know, actually I need to start thinking about what's the downside if I don't make this shift. I don't think that awareness is quite there yet in Asia because the regulatory developments are a little bit behind what we're seeing in the rest of the world. But that's starting to change now with, you know, for instance, in Hong Kong, the HKEX regulations, the SFC has new regulations which are kicking in, the HKMA as well. And so as the downside starts to become a little bit clearer, I think that will motivate more clients to start, you know, putting more of their money into ESG products, using ESG to screen their existing investments. And hopefully that will also incentivize addressing some of the data quality issues that we've seen.
So talking about ESG reporting and regulations, we have an expert here, Tony. So could you share with us the latest trends in ESG reporting and some challenges that your clients are facing currently?
Thank you. Like you said, the SFC required TCFD reporting for asset managers in 2025, and this is one of the key changes that's going to happen, and also pushing the listed companies to follow suit. And the stock exchange has already been pushing companies to set carbon reduction target. If you have taken a look at the Science-Based Target website, you can see the list of Hong Kong companies joining the project has been going up in a pretty aggressive way. And if we are talking about really to achieve carbon neutrality by 2050, then these numbers, whether it is in Hong Kong or worldwide, it has to continue to go up. And the second thing is about the ISSB, which is an entity established in last November, and they completed the 2 public consultations for disclosure requirements. The market expect these 2 new requirements. One is including one which is about carbon-related disclosure. Market expect, jurisdiction will adopt these new requirements in 2 to 3 years. And there's a lot of impact on this new disclosure requirement because in Hong Kong, the listed companies is using IFRS, International Accounting Standard. So this will be something that all the listed companies and maybe some private companies have to study and look at because the requirements they are talking about disclosing Scope 3 carbon emissions, which I think in Hong Kong the majority of the companies still only disclosing Scope 1 and 2 emissions. So there are a lot of gaps in this arena, and there might be some room for some FinTech startup that can come up and to provide some sort of solution on this front. I understand that Hong Kong has already, some startup has been established focusing on filling this gap, and the government is planning to do something on this front as well. So these are, like I said, the landscape, ESG landscape has been changing and will continue to change. And there will be a lot of challenges that whether family offices or impact investors have to take into consideration. Also, I think we mentioned about talent, and this is, has been a key discussion point for the past 2 years about having the sufficient talent in the market.
Thank you so much. So we are halfway to the end of the panel discussion. Let's cheer up a little bit, take a breath, have some coffee, because it's just us on the stage to talk. I think you're very quiet. Some of you may fall into sleep. So in the first half of this part, we actually shared about the overall trend and also the industry as understanding about ESG, philanthropy, impact investing, and also from the single family perspective and from the industry perspective. We also talk about the investment management side in this sector. So in the second half of the panel discussion, we will continue with 2 more topics. One is the next generation, and the other one is the government support. So talking about family office, next generations in Hong Kong have also embarked on their impact investing journeys. I would like to ask Manny, Chloe, and Katie the next question. How does the next generation think about family legacy and impact? Is the mentality different from older generations? Maybe Chloe first.
I would share some of our experiences. It's not so much about impact investing, but as you said, how to create impact and what does family legacy mean to us. I think as I shared in the bigger section earlier, the definition of legacy, to me, I feel like I have some new insights or, well, feelings toward it nowadays, because although I'm second generation, I do have a lot of friends who are kind of doing philanthropic work or running family offices, but they are either in third or even fourth generation already. I think the challenge with legacy is that ultimately everyone has different passion and everybody has different aspiration. So how does a family office or even a business or whatever setup we want to go with, may it be philanthropic or business, how do we define or think about what we want to carry on, right? I think for some entrepreneurs, it will be the legacy of the business. For some, in terms of the reputation or the actual running of the business. For some, it might be as simple as the transfer of wealth as the legacy. I think I'm quoting Jasmine here from EY. And third, it could be core values and just way of doing things. So for our family, philanthropy falls, and our business all fall into the way of doing things. So the way we look at it is that we have all this set up. We have the family office, we have the business, and we have the foundation. It's because my parents want their legacy to be doing goods in the society. So in terms of business, especially as more traditional business owners, it's not easy to turn your business into an impact business, let's say, or a social enterprise. But I think nowadays we can all agree that there are so many ways you can ensure that your business is still doing good to society. How do you ensure, I think ESG sometimes also becomes something that sounds really complicated, but I think for us, we have always believed that even before you have any ESG reporting, right, treating your employee rights, continuing your business as a way to ensuring that they have employment is already a big ESG component. I think sometimes we forget that, sometimes businesses, especially in this environment, sometimes, they're not the best investment vehicle, honestly. There are many, many more products out there that will give you higher yield than running a business. But as business owners or as entrepreneurs, we do feel that there's a huge ESG component in ensuring that the operation of the business, as part of ensuring employment, ensuring that our business partners continue to have the business relationship. So it's multifaceted. But let me go back to the value part, right? So that permeates through whatever we do. So my siblings are involved in running the business, and they carry that on as a legacy, may it be with this business or maybe with another business they found later. For the family office and for the foundation, we want to put in a structure where everybody feels supported by the family office and by the foundation with in terms of what they want to do and what they aspire to do, right? So that means that the family office does provide support to if you want to start your own business. How do we support you? There's concierge service, there's consolidated accounting services or reporting services, we call it. And then for the foundation, even though we are very much focused on our mission, but the way of making contribution to society, that can be replicated with your own foundation if you want to set one up. So as I said before, our foundation focuses on Chinese art and culture, but if I later on want to find a charity focusing on animals' welfare, I think for me, it's almost a turnkey. So I'm gonna do that with the lawyer, I'm gonna do that with the accountants, I'm gonna do that with multiple institutions. So I've learned the experience. So I think having these structures really help family members who have different aspirations to sort of find resources available to them much more easily. Yeah.
Do you have anything to add, Katie?
I think the only thing I'll add is if we move away from all the jargon, ESG is really about being more risk aware in the longer term. And impact is about how do you further your resources, right? So whether you're investing $1 or giving away $1, how do you make it go further So when we frame it that way in a family context, then it can kind of have many different ways of it being manifested. So I think one example we've seen it take root might be, on the philanthropy side, they're supporting environmental causes. Then for a cohesive discussion, then it might spill over to the capital side of things on the family investment of should we be more risk aware, right, about fossil fuel exposure and sort of pricing of carbon and things like that. So then it has implications. It's about connecting the dots, and also when it comes to values, some families interpret it as being consistent with your values. So if you're supporting environmental causes and you're investing in like a really polluted company or industry, then as a family, are we staying true to our sort of vision and mission? So I think it's what we've seen is it takes all shapes and forms, as families are all very different. But the way we see ESG and impact investing, it's about coherence, connecting the dots, and a new way to engage the different family members who might be sort of involved in different aspects of building the family legacy.
Thank you so much for sharing the insights. So next, we can move to the one about the industry challenges and opportunities, and also the government's policy update and support. So could you share with us your views on including the challenges and the ways to overcome them in promoting sustainability and philanthropy in Hong Kong? Maybe Tony, do you have anything to share? So to our audience, if you have any questions, remember to pen it down. We will leave like 10 minutes to address your questions. Thank you.
I believe talent is the key issue in the very near term. You can see there are a lot of ESG-related qualifications out there for interested parties to take up. And universities has been organizing courses, hoping to resolve the situation a little bit. On the other hand, how we gonna develop existing talents is also a key issue. And that's number one. Number two is the data remain the key challenges. If you want to make an impact, you have to have convincing data, and I think Peter and I were talking about before the panel. There are already some sort of greenwashing rules and regulations in Europe, and already some convicted cases as well. So it will come to Hong Kong sooner or later. So having reliable data is absolutely critical, and also in presenting the kind of impact that any investment that was made.
Thank you, Chloe. From the single family office perspective and also the foundation perspective, do you see any challenges and also how to overcome? Do you have any suggestions? Yeah, generally.
I actually think Hong Kong has made it quite easy, to be honest, in terms of just...
You can also talk about opportunities besides the challenges.
Because, I mean, as you all know, Hong Kong has always been very easy to set up a company, to, even set up our foundation here has been very easy. And the tax is very simple. Everything is actually... I don't think it will be an excuse. Hong Kong does not give you any excuse of not setting up any structure, let me put it that way. I think the opportunities from my personal experience, especially in terms of philanthropy, is Donation in kind has always been a big challenge for any philanthropist in Hong Kong. We talk about, especially when the donation in kind usually involve arts nowadays, but it can be anything, right? But Hong Kong has, I think there's opportunity to further promote that. We have a lot of collectors in Hong Kong. We have a lot of people with different type of assets and resources who might be able to contribute to the society via different vehicle. And I think if we arrive to a place where it's not just financial support, I think it will make it will enrich the landscape. Of course, I'm not an expert in this. I don't know exactly how we get there, but I think for a lot of people who are sitting on art collection, antiquities, various types of assets, who want to use those to either enrich our museums or help NGOs with, even with, I mean, sometimes land or properties, right? It has been a little bit more complicated if you want to go that route. So I do see some opportunities there. But in terms of structure and setting up, it has been quite easy, actually.
Hong Kong do have advantages in that. So Katie, you mentioned about the talent issue already. Now I would like to invite Peter to address this one. Besides the challenges, you can talk about the opportunities as well.
Yeah, well, I guess I will add to the challenges because, particularly on the ESG side, I mean, I think I agree on philanthropy, impact investing. That's the challenges are maybe not that significant, but on the ESG side, you know, as Tony mentioned, you have the talent issue, which you heard already from Katie that the family offices are looking for ESG talent. Well, all the private banks are looking for ESG talent as well. And frankly, there's just not enough available. And with the quarantine restrictions, we've had a little bit of difficulty getting from talent outside of Hong Kong as well. So that's going to definitely be something that needs to be addressed. And education, is the other challenge that that we need to address because people need to understand more about what exactly ESG means. And there needs to be the talent to then provide that education. So if you want to really kind of develop Hong Kong as an ESG investment hub, people need to have a better understanding of what that means. And then, on the data front, as Tony said, there is a certain amount of skepticism out there about the validity of certain ESG ratings. You have seen some pretty significant cases of greenwashing getting punished in other jurisdictions, and here, I think there's a lot of concern about whether ESG ratings have really been tested thoroughly or not. Whether they're really valid. Is there enough transparency into what goes into those ratings in order to encourage investors to feel confident that they're making the right investments? So, and then lastly, I'd say what you also need to see is regulatory alignment on ESG standards, because if Hong Kong goes its own way on ESG requirements and Europe goes its way and the US goes its way, then you have another big challenge, which is how do you compare investments across jurisdictions? What does it mean when a product gets one rating in Europe and then you have a sort of comparable product investing, let's say in Asia or in China, and it gets a rating, but the standards that underpin that rating are different. So these are some of the issues I think that will need to be addressed.
Very insightful, very honest as well. So having talked about the challenges and opportunities, to take one step further, now is our time to take some notes and sentiments. So it's what's your advice for the government side to take steps? So what support do you think the government of Hong Kong or other stakeholders can provide to facilitate the development of sustainability in the private wealth management sector? And what needs to be done to encourage greater fund inflows into ESG into this part of the world. So maybe each one of you can address that, and we can then just conclude this panel.
Maybe I'll start first.
Thank you.
Riding on Peter's point, when we first started 3 years ago, we were very gung-ho and thought to ourselves, let's just go, let's just deploy capital. And then as we do more of that facilitation, we realize, actually, no, there's so much room for education. And obviously, one organization alone can't do that. So there is opportunity for the government, in my mind, to subsidize and support some of these educational outlets. And we have a full range of providers right now. I think what we're seeing as also is there's room for education specifically around private wealth and impact investing and sustainable investing. So moving away a little bit on the technicality of things, but more on the impact investing spectrum, there's a lot of room to support that. And then the second point, I think, is it's not a competitive thing at this moment. What we're seeing is there's room for all. We would really need to grow this tent. And so I would think the government has opportunity to do more regional, cross-border promotion when it comes to family office and impact investing. So it's not in the headlines like Hong Kong is the best city versus Singapore and the best. When it comes to what we're doing, I think it would help everyone if we kind of amplify it and encourage Hong Kong, Singapore, Hong Kong, Indonesia, Hong Kong, India, sort of these cross-regional kind of hub-like events and narratives would really help.
Thank you. Next.
I think Peter said it already. We need to have a common platform for Hong Kong and especially China. And Hong Kong has been doing pretty well in promoting ESG disclosure. And on average, the level of transparency is pretty high. How are we going to make this a benchmark for Chinese companies, A-shares, and also other impact investors or other stakeholders, bankers in the industry? Because it's a very basic question. What is ESG? It needs a lot of education. Even though we are talking about ESG, it's already mainstream, but I think still there are a lot of education needed. And how Hong Kong, as an green finance hub, act as a benchmark and for Chinese companies to follow suit.
Thank you. So next, Chloe or Peter?
I guess I'll just add to what Katie was saying before about education, and note that recently the Financial Services Development Council came up with a white paper on cementing Hong Kong's role as a premier private wealth management hub. And one of the recommendations in that paper was setting up a wealth management institute, which could develop talent for the industry. And I think that would be a great vehicle to promote ESG awareness. Not just for the talent that might be going to the industry, but to clients as well, and to talent that might be going to family offices, rather than necessarily having to create like something else. So that would be one area where I think the government could provide some support, and maybe also through subsidies for education for people, mid-career education and training for people who want to learn more about ESG or potentially go into that field. So we've seen that kind of approach in the past to support the wealth management and asset management sector. There were some pilot programs that the government subsidized, and I think the same approach could be taken to ESG.
Great, thanks. Chloe?
I think my personal thought is actually that perhaps there's some room to ensure the overall public and the consumer side are also on board with this. So I think a lot of times we're talking about this from very inside out, but sometimes I wonder, for example, if I were the owner of a publicly traded company, and I have all these requirements to meet, and these are all my goals and regulatory requirements, but then the investors or the consumers are not reflecting this in their choices, but only purely based on financial or business success, then there will always be a challenge for us, even at a board level or in a management level, forcing to make decisions. I think at one point we will all, someone in the line of philanthropy, I think it would be great if we all get there so that our investments, our buying habits and everything are also aligned with ESG. Right? So that's kind of my personal thought. It's not a professional opinion by any means.
Thank you so much for your insightful sharing and your time with us. Also, thanks our audience being with us in the past 15 minutes already. So now I would like to open the floor to the audiences. If you have any questions, please feel free to raise your hand. Thank you.
Hi, this is a question for Mr. Tony Wong. Okay, when we talk about ESG, most of the time we think about environment, especially at the list company disclosure areas, and you talked about data integrity measurements. You mentioned that before. And what about, we still already have that problems with the environment, with carbon emission and all that. How do you measure those? When it comes to S and G, and how do you achieve ratings? How do you, rate this company, though they treat the staff really well? Do they have any ratings providing that already, or these companies treat the staff really badly and in order to generate profits? So I guess my question is really circling around breaking down the E, S, and G. And can you share with us what sort of measurements in relation to those letters? Thanks.
Social is definitely one of the key metrics for the rating companies. They are looking at E, S, and G. So S and G also are key contributors to the methodology. The key thing is this is also different from industry to industry. Some industry, for example, financial services company, they may be looking at more on social and governance issues. So, but to answer your questions, these are already under the radar of institutional investors and rating companies, and but the problem remains the same. For example, the lost time injury rate, it can be different from companies to companies and industry to industries. So for comparison, it can be difficult, and even more difficult for investors to make an informed investment decision based on these sort of figures.
Do we have more questions from the floor? Okay, another one.
Yeah, thank you very much. So actually, my background is kind of investor, and we're doing the ESG kind of in the mining industry in Europe. So I think to your point, there are some differences between Europe and kind of the ESG investing becomes more mainstream in Europe, and then becoming, kind of rising here in Hong Kong. So to your point, do you think, as to the ESG, landscape in Hong Kong, how will that be kind of shaped? Will that be more kind of, aligned with the rest of the world? Let's say the Western part of the world, which is more mature in this sense, or because we're talking about, it offers gateway to the mainland Asia market. So then it will more kind of tailored to the Chinese market in terms of ESG kind of standards.
Okay. I'm not sure who that was directed at, but I'll take a whack. So I think, generally speaking, Hong Kong tends to follow regulatory trends that are set in other parts of the world. When it comes to a whole set of different types of regulation, we have tended to not be out front, but try to avoid being at the end of the pack. So we're sort of somewhere in the middle. Let's say regulations like MiFID, and will be reflected in a Hong Kong equivalent at some point. And I think that's the most likely outcome is that we'll do the same. I mean, we're starting to see it already, right? With at least climate risk regulation in Hong Kong, and I suspect we'll see that happen in other areas as well. But will there be some things that will be particular to Hong Kong, or that might be a little bit more influenced by the type of disclosure that you have in China? Possibly. But I think what would be ideal is if the disclosure standards in China develop in a way that is aligned with the standards elsewhere, so that we avoid some of this fragmentation that potentially makes the data less meaningful for investors.
Great. Actually, we are running out of time. We are on the track right on time. If no more questions, this is the end of the panel. Thank you so much for your time, and many thanks to our guest speakers to spend the time to share your insightful knowledge and also views. And also, we are noted your suggestions. So jointly, let's work together to drive Hong Kong to leading private wealth hub. Thank you so much. I just want to promote, actually within Invest Hong Kong, we newly set up a dedicated team to promote ESG as well. If you have any related inquiries, please feel free to approach us as well. Thank you. Thanks.